I'm Jill Schlesinger, editor-at-large.
And I'm Ilyce Glink, the MoneyWatch real estate blogger.
In today's reality check, news on the housing market continues to disappoint. Where's the market headed next? Ilyce, we recently got the reports about how the housing market did at the end of last year. Not great.
Not great.
Why?
Well, what we're seeing is this sort of bubble, and it's kind of a fake bubble caused by the $8,000 first-time homebuyer tax credit and the $6,500, the new $6,500 trade-up credit. So originally, the $8,000 homebuyer tax credit was going to expire November 30th. If you back that up for new construction, you really couldn't buy a house because you didn't know it was going to be extended, and you needed 8 weeks to close, and then the new house had to be bought. And so we saw people stop buying new construction back in the end of September, so October was awful for new housing starts and for new construction sales. And that continued because we didn't get the new tax credit signed until November 6th. That's when it started. So you have to back things up in real estate. It's not like an overnight thing like the stock market. Then when you had the $8,000 tax credit for existing home sales, what you started to see is sales go rush, all the way to sort of mid-September, even like maybe mid-October. And then everybody said, oh my gosh, we're not going to have time to close November 30th, and sales completely dropped off. So the numbers that we're seeing were entirely because of this arbitrary deadline they set of November 30th.
Now that we have the extension to April 30th, are you more upbeat about the first quarter of this year?
Well, it's interesting to see what's happened. So of course, once they started this and November 6th, is when it was signed, you still had kind of a 3 to 4 week lag where people had to go out and buy more houses and find houses to buy. And so the December numbers were pretty lousy as well. We saw existing home sales down 16%, or almost 17% in December. And that again is because of the time lag. It takes time to go out and find it. Here's my big fear about the $8,000 and $6,500 tax credits. I think we're just borrowing from the future. We are pushing sales forward, as they like to say, although it feels like we're pulling them backwards. We're pushing them forward. We're having them now. And now we've got 2 more arbitrary deadlines set up. And we've seen exactly what's going to happen when those deadlines get passed and we start to get really close to them. We're going to see sales drop off again at the rate of, double digits. So I think that everybody has to start preparing themselves for this spring. And then you've got my other favorite subject, mortgage interest rates.
Oh my God, you are really Debbie Downer today.
I am, but I'm concerned because the Fed has been spending $1.25 trillion spending all this money. It was supposed to end December 31st. They're buying mortgage-backed securities. That's pushing down the mortgage interest rates. What did you get on your loan? 4 3/4? I got 4 1/4 on a 15-year. It's 50-year low interest rates, and it can't stay there. And so the Fed has been arbitrarily pushing down mortgage interest rates. At the same time, we're getting these $8,000 and $6,500 tax credits. When it all goes away, I'm really concerned about what's going to happen middle of 2010.
So, okay for maybe a quarter, spring selling season is going to be weak, and look out below after the second half.
Let's see what's going to happen. Mortgage interest rates should start to creep up, which of course will cut a whole bunch of people out of the marketplace. And if you don't get $8 grand to close, why are you going to close? I think people are going to wait to see how the market settles and if home prices start to decline again.
A sobering assessment, Ms. Glink.
Sorry. I'd love to have some happy news for you. Maybe next time.
Okay, we'll bring you back for the happy news. But today a little bit downer, and that's your reality check. Thanks for watching.